Hi everyone. In this video, we'll continue our discussion of Chapter 5 information by talking about the need to value inventory at the lower of cost or market. After companies apply one of the four costing methods, FIFO, LIFO, weighted average, or specific identification, inventory then must be reviewed to ensure that it is reported at the lower of cost or market. Lower of cost or market requires that inventory be reported at the market value when market value is lower than cost. Market is defined as the replacement cost if you are using LIFO. Otherwise, market is defined as the net realizable value if you're using FIFO, LIFO, or weighted average. Advanced courses in accounting will cover the specifics of how you calculate net realizable value and replacement cost. A decline in market value means a loss in value of the inventory. When market value is lower than cost, a loss is recorded. When market value is higher than cost, no adjustment is made. The lower of cost or market is applied in one of three ways. To each individual item separately, to major categories of items, or to inventory as a whole. Let's take a look at an example from your textbook. When lower of cost or market is applied to individual items of inventory, the number of comparisons equals the number of items. For this company, Roadsters has a total cost of $170,000 and total market of $140,000. Market is lower than cost. So if lower of cost or market is applied to item by item, you choose the lower of the two costs, market or total cost in the books. And the sprint, the market is higher than the cost. So on an item by item basis for the sprints, we would value the inventory at the lower of those two amounts, or $50,000. So the total cost in the books of inventory on hand using either FIFO, LIFO, weighted average, or specific identification to arrive at this cost is $220,000. That is an accurate cost. There's nothing wrong with that. But for financial reporting purposes, GAAP says that you must report your inventory at the lower of cost or market. The lower of cost or market for these two items of inventory is $190,000. So the book says to write a journal entry to write down the inventory, debit cost of goods sold, and credit merchandise inventory. And that adjusts the cost of the inventory to its market value. Again, this is just a very light summary of applying the lower of cost or market. When you take more advanced accounting classes, you'll get into this in more detail. That's all for this video. See you next time.